Welcome to Bears in Exile. Today is Tuesday, March 20th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, GE, XOI, XLF, and Apple, the NASDAQ, and that's it. Okay. I like going through that little spiel. It's just fun to talk fast and then don't shift gears. And anyways, it's fun for me. Okay. Well, today was a really cool day. The Dow down almost 69 points. It was more fun at its lows when it was triple digits, but still, I'll take what is given to us today. Last night we were talking about the excessive separation and that the Dow was looking like it was going to roll over and likelihood of a downtick. Well, today we got the downtick. That's fantastic. It almost got to its downtick target, but not quite. Just shy of 13,100. So hopefully we'll see a little more to the downside, resolve that downtick, and then this bubble will be fixed, at which time we'll have to see what it wants to go and do with itself. Obviously, there were plenty of dippers in there today, buying it up, which has been the key to success all this time. Is this time going to be any different? Well, that's what we're going to examine. Alright, we have the 14-day RSI moving average still ticking down. Very good for the bears. We have the stochastics rolling over. Very good for the bears. Down on the CCI, down on the MACD, down on the MACD histogram, down on the RSI. All indications, along with the downtick, would suggest that yes, we will have some more down, and that we will get just below 13,100 at least. So the odds are good for the bears at this moment. Now, SPX. Here's where it gets kind of tricky. Alright, we have a hanging man very nicely developed in SPX, which is bearish. But we have no downtick in the short-term moving averages. It would have been so much easier if we had had that downtick, but we don't. We do have excessive separation. We can see it. It's plain. It's obvious. We have the 14-day RSI moving average ticking down. We have the stochastics ticking down. Still high, though. CCI ticking down. RSI ticking up. Down on the MACD histogram and up on the MACD. So overall, it doesn't look good, but it isn't a clear everything is pointing down and we have a downtick. So odds are decent, but it isn't a sure thing at this moment. Nothing's a sure thing, but when you have really good odds, it's nice to play the odds. The odds are tilted in the bears' favor, but it isn't overwhelming at this point. So hopefully tomorrow that will change. The NASDAQ. A very small, fat body, spinning top, indecision, an inside day, not exactly a good sign for the bulls. We have excessive separation, we have wobble. We know there's a bubble here. The stochastics are holding high. Down on the 14-day RSI moving average, good for bears. Down on the CCI, up on the RSI, up on the MACD, and slightly, very slightly down on the MACD histogram. Very mixed picture, even more mixed than SPX, which itself was mixed. This could look a lot better. I don't particularly like it, and I don't think that the odds are slanted that great in the bears' favor in NASDAQ terms. The VIX. VIX did good today. Gapped up, filled the gap. We have a hammer. We have that uptick from yesterday. And we have a ways to go until the uptick is resolved, somewhere around 1630, which isn't too far. I mean, if we have a move tomorrow like we do today, that's going to be taken out. That's going to be done. And I mean, it wasn't too far away from it today. 15.95, only about 35-40 cents. and really that's nothing. So not too shabby. This is doing what it should be doing. Down on the 14-day RSI moving average still. We have the stochastics rising up. That's good for the bears. Up on the CCI, sideways on the RSI, up on the MACD histogram, up on the MACD. Overall, looking pretty good. Now, the 14-day RSI moving average is still pointing down. Unless we're able to get that to roll over and turn up, which I kind of don't think is going to happen at this moment, the upside will probably be muted. Even if the stochastics get all the way to the top. Yeah, there could be a good move, could get us all the way to a bar retest. But with that 14-day, most likely it will be subdued. So a break of the long-term moving average bar at this moment is unlikely, but a bar retest is completely doable. TNA. Yeah, I like that. Inside day with the real body, ending with a hammer. We got a downtick today. Excellent. Downtick gives us a target just shy of $61. That's a decent little move to the downside, but that will fix this entire little bubble with the wobble and excessive separation and all that jazz. And that bubble correction does not take us into the bar, and it does not even beat the lower price consensus level. So understand that this could be muted as well. But rule number 1, fulfill the downtick, and rule number 2, see what it wants to do from that point, since it'll essentially be neutral. And although cascading waterfall of the short-term moving averages would be most welcome, but at this moment the odds for that are just not the greatest for that. Would be nice. 14-day RSI moving average ticking down into oversold even after this run. And stochastics turning over, CCI turning over, RSI still heading up, downtick on the MACD histogram, and a slight uptick on the MACD. Mixed picture, but I do like the 14-day being very low, and if it can stay there and have the stochastics race down to meet it, that would be a very good move in the price. So that is a very nice bearish setup. I do like that. And you know, if this were to race all the way to the bottom, yes, it would break the downtick target and do something to the bar. Impossible to know at this moment if it'd be a mid penetration of the bar, or if it could even go down to challenge the previous floor. But regardless, this is very encouraging. The XOI. When oil is bullish, the market is bullish. Look at oil. Aha, yeah, that's why we look at oil. Okay, last night we were saying we liked it sitting here. We like the long-term moving averages coming in for the crush. It does damage to the long-term moving averages, and that we wanted more damage to the long-term moving averages, although last night it looked like you know, that it could go up. Fortunately, that's not what happened. And potentially we could get the middle Bollinger Band above the short-term moving averages, which would be very nicely bearish. Notice the candle went down. It kissed exactly on the dot the major price consensus level, slightly backed away from it, but very nice. If we can get below that, close below that, that is bearish. 14-day RSI moving average still ticking down. Stochastics attempting to reverse themselves with it. Downtick on the CCI, downtick on the RSI, downtick on the MACD histogram, down on the MACD. Very nice. And it definitely would suggest that there's easily the potential for lower oil. Fabulous. I don't believe that the long-term moving average bar is going to be dissolved instantly. It still has a lot of separation in it, has a lot of strength. And, you know, attack on Iran, things of that nature, speculation, should help deaden some of the down movement. But it is, it's in definite danger of taking some damage, which is completely, would be fantastic. XLF, the financials, these were on a tear today. These are kicking butt. we have a bullish engulfing and massively fat body, spinning top, little stubs at the top, little stubs at the bottom. We have excessive separation. We have a little bit of wobble. There is a bubble here. We know that, but it's not the worst bubble I've ever seen. That doesn't mean that it needs to reverse tomorrow. It would be nice if it did. But this definitely is showing some strength. You know, they are harping on the news. Buy banks, buy banks. Banks are cheap. Banks are foolproof. Blah blah blah, which I think is utter rubbish. But that's what they're peddling on CNBC, and obviously, people are buying this story. Now, in our indicators, they also confirm the same thing. People are buying it. 14-day RSI moving average ticking up. Stochastics locked in the upright position. CCI down, yeah. Up on the RSI, overbought. Up on the MACD histogram, up on the MACD. Overall, lots of strength. Until the flavor of the week is over with and they need a new flavor of the week. So, but evidently, it is not time for that. Now, the only troubling part about this is flying in the face of what the Dow looks like, which we do not like. So, which I don't like. All right, Apple. Yet another one flying in the face of a possible downturn. A new all-time high today. Massive hanging man. Look at that tail. You can see the excessive separation here. You can see a little bit of wobble. There is a bubble here. We don't have a downtick. We don't have any kind of indication of a downtick except for a possible reversal candle that is weak. No reason to short it because of that. There will be a reversal at some point, but we don't have any clear indication of that yet. 14-day RSI moving average, slight tick down, holding in the upright position. Stochastics holding in the upright position, pointing up. Slight downtick in the RSI, uptick on the MACD histogram, up on the MACD, and down on the CCI, and decent volume. GE, trying to get a better read on the Dow. Inverse hammer, very nice. And we have a slight downtick. Look at that excessive separation in the short-term moving averages. There is a bubble here. And now that we have a downtick, we also have a target. Target is right about 1960. Good move down. Well, decent. And so that agrees with what we looked at on the Dow, since the Dow chases GE typically. 14-day RSI moving average going sideways, still pretty low. Stochastics attempting to roll over, not definitive yet. Down on the CCI, down on the RSI, down on the MACD histogram, up on the MACD. A little bit mixed, but overall definitely bearish slanted. And that downtick is most welcome. Oh, the bell of the ball, UUP. Now this is not bear friendly at the moment. This is bull friendly. Yes, it's a spinning top, but it is an inside day spinning top. Not exactly what we want to see. Middle Bollinger Band getting above the short-term moving averages, and of course the candle. Not what we want to see. Bearish. Because bearish for UUP is bullish for the stock market. Down on the CCI, down on the stochastics, down on the RSI, down on the MACD, looking for a bearish cross, down on the MACD histogram. The only positive indication being the 14-day RSI moving average still pointing up, ticking up, indicating that a down movement should be somewhat muted. Would be better if it had a better angle, but it does not. Bollinger Bands are crimping. Not great. We're still above the major price consensus level, but overall this is definitely bearish, which is good for the market. Is this going to be the market's saving grace that helps it not decrease too much, even with the possible rollover in the Dow? It is possible. This is not good. FXE, the euro. Looking for confirmation of what we see in the dollar, and we do see it. It's a fat body spinning top. The real body is an inside day of yesterday, which actually is very, very mixed, because that in itself is not a good sign, and actually it sort of indicates the potential for this wave pattern we've been talking about, denouncing into a double flat line. This indecision and hesitancy is either indicative of down movement or sideways movement, which would be going into a double flat line. Oh, can you believe it? We've been talking about that for weeks. And here it is, and the potential now is very, very great. The long-term moving averages in a flat line. Short-term moving averages just need a down or sideways candle, slightly down candle. It will be in a double flat line, and then if it goes sideways, we'll have a perfectly formed double flat line. Not what we want, but that's what it is. Bollinger Bands crimping. Downtick on the 14-day RSI moving average, up on the stochastics, up on the CCI, up on the RSI, up on the MACD, up on the MACD histogram, up on the MACD, looking for a bullish cross. It is a mixed bag. We need more data, but the potential is not what we're looking for. Hopefully, it'll have either a strong up day or a strong down day and avoid double flatline. Conversely, if everything's able to get to its top, 14-day RSI moving average is still moving to the bottom, and it wants to join it for a race to the bottom, that will be nice for the bears, but it is too early. Too early. GLD, the second VIX. Just little, almost a doji star. No real body to speak of. Short-term moving average is all pointing down. We were hoping that we'd get a retest of the 200-day moving average. That was not to be today. And even with the dollar going down, red day, just could not pull it out, could not go up. Even with the VIX increasing, gold could not pull it out. Very interesting. 14-day RSI moving average still ticking down. Stochastics turning around to the up. CCI down, RSI up. MACD histogram down, MACD down. Very mixed picture. And indecision candle, not attractive. SLV. Yeah, looks like it's not going to get its uptick target now, is it? Well, we still have 2 more days. You never know. Middle Bollinger Band above everything. Short-term moving average is pointing down, ending with a spinning top. Very nice. 14-day RSI moving average ticking down. Stochastics pointing up. CCI down. RSI up. MACD down. MACD histogram down. Total indecision. Mixed bag. Not attractive. And the long-term moving averages are rapidly diminishing. Is there anything that I missed? Ah, yes. Just for fun. The VIX. Yes, we've already looked at VIX. This is VXX. VIXX. Ha ha ha. Big, ugly, nasty, nasty, nasty day. We were talking about this one last night with the interest in having a new all-time low, and it delivered in spades. It does not look attractive enough to pick up at this moment. It's tempting just because I like bargains, but beyond that, it is unattractive. New low, short-term moving averages pointing down, middle Bollinger Band above everything, way below the lower price consensus level, down on the 14-day RSI moving average, down on the stochastics, down on the CCI, down on the RSI, down on the histogram, down on the MACD. Ooh. So, while intriguing, this one will be interesting once there's an indication of an uptick of some type. I think that will happen at some point, but for the moment, just going to watch it and let it play out, and when it wants to reverse, let it reverse. Hopefully hop on for a quick scalp, but the timing is just not right. And that's it for this evening. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.